Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. His website, CanadianInsider.com, home of the Canadian Insider Club. Welcome back to the show, Ted.
Jim, thanks for having me back, and thank you to everyone listening in.
Well, not since the dirty 1930s and the Depression then, which lasted 10 years, we're into a financial situation, an economic situation unseen for almost 100 years. What do you expect is going to happen? Is there going to be some kind of major financial shakeup?
I think so. You know, we basically updated our core number 3 investment theme, which was we were looking for a complete monetary reset, meaning we were going to have a sort of a new world order in terms of reserve currency. I don't mean in terms of politics. I just mean in terms of the world, displacing the U.S. dollar as a world reserve currency. We were looking for that in relatively medium term, shall we say, 5 to 10 years. However, we've tinkered with that theme a little bit. Now, what we're looking for now is a monetary system reset. So we're looking for, basically, we expect to see a change within the existing monetary system as opposed to a massive shakeup in terms of the reserve currency. So there's a subtle difference, but an important difference there, because I think what we've seen over the past few months is that the authorities have done everything they can to kick the can down the road, and with some success. You may not like what they've done, you may not agree with what they've done, but they've done it. They've kicked the can down a little further. And, Jim, I was just reading in the New York Times yesterday that in this coronavirus relief bill, this $1.9 trillion relief bill, in there was tucked a little item, in the grand scheme of things, was only $86 billion to bail out multi-employer pension plans in the U.S. So, Jim, this was a staggering footnote, an $86 billion footnote that if it weren't for this crisis, it would have been front page news. But the New York Times picked it up, but they're one of the few who actually, I guess, read the whole entire bill and noticed this. And, so my point being is that, they're kicking the can down the road. They're leaning towards inflation to help manage these debts. Whether they're going to be successful or not, we don't know. But the fact of the matter is that no one seems to be ready to challenge the U.S. dollar as a reserve currency. No one's sort of screaming, take me, take me. Even, the Chinese who are always sort of looked at as being the competitor. They don't seem to be in a big hurry to open up the renminbi to, free market flows. So, the U.S. dollar is probably going to be the default reserve currency, for the next little while. So what does that leave us with? It leaves us with a financial system that has evolved over the past couple of decades, and I would argue it's the whole sort of erosion of the integrity of the financial system started with Greenspan when they bailed out long-term capital management back in the 90s, when basically it was corporate welfare handed out to a bunch of Nobel laureate hedge fund elites who got into trouble. and the Fed was there, and they started the whole moral hazard game of bailing out the wealthy, the too big to fail, and the whole sort of Western democracies, they've let their financial systems essentially be run for the benefit of a concentrated a few. It's not that few. It's not like a handful, but in terms of the overall economy, it's a small number. And those numbers, those players who've benefited from the Greenspan put, and which has evolved, of course, over the years, have developed huge market power, and it's left us with a system that just does not have the integrity that it used to. And I think major change is coming, and it is coming in 2021.
So, when you say these changes are happening, what's that going to mean to the average investor, the average person? Because not all of us are investment bankers, making hundreds of millions and throwing billions around like you might throw a couple of bucks around at the racetrack.
Exactly. Jim, this is going to be the revenge of the geeks, okay? And a year ago, I did not see this coming. A year ago, we were in the early stages of the pandemic. Markets were in free fall a year ago, and the Fed had yet to step in to bail out just about any economic entity that it could send a dollar to. But what we've seen happening over the past few years ahead of this pandemic and now in full force is a group of software developers, engineers, financial analysts who have left the mainstream Wall Street field, and they've gone into decentralized finance, cryptocurrencies, and they've been busy building a parallel financial system. And when I mean system, I don't mean in terms of reserve currency. I mean in terms of borrowing, lending, providing services, providing payments. There is a whole new universe that has been in the works, and it is rolling out, and the current universe and this new parallel universe, they're about to collide. And that is what's going to shake up the current system. It's not going to be the fall of the U.S. dollar from grace. It's going to be better stuff, that we've got much more equitable, much more democratic types of applications, financial applications that are now starting to roll out. They're currently being rolled out on the blockchain. They're not that accessible to the average investor, like you said, but every day they're becoming more accessible. And the good news for stock market investors is there's more and more public companies that are providing on-ramps into that investment opportunity, which I believe is a generational investment opportunity in the financial sector. This will probably be one of the last investable great evolutions in the financial sector in my lifetime, at least my investing lifetime. We see another one, great. But what we're going to see, I think, over the next few months is going to be it's going to be redefining how everyone ends up doing their banking in the next 2 years. Well, the way many businesses and many people do their banking today, it will look a lot different 2 years from now. And I think the change is going to be sudden. It's going to be revolutionary, and it's going to totally shake up the existing investing landscape in the the Canadian financial services sector and the U.S. financial services sector. So, if you think you're sitting on big bank stocks and that they're safe and that everything's the seas are calm and the bank stocks have gone up nicely over the last 6 months, they've trailed the disruptors, and they've trailed them a lot. And I think for the status quo, the seas are going to get a lot rougher over the next 12 to 18 months.
We'll have more with Ted Dixon right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Ted Dixon. When you said there was an $86 billion bailout for pension funds in the U.S., isn't this kind of an indictment of this low interest rate environment that governments have encouraged? Because with low interest rates, pension funds, insurance companies, and banks aren't making the money that they expected on their safe investments, which either has made them go to riskier things like the equity market or hedge funds, or they're just not making any money and they're in danger of collapsing. Is it okay to have higher interest rates? Because it seems helpful, and also for people in fixed incomes who may have a savings account.
Right. Well, the unintended consequences of monetary central planning are coming home to roost. And so, it's interesting now the taxpayers are stepping in to plug the holes. But, Jim, we don't need higher interest rates. Don't need lower interest rates. We need market-based interest rates. Okay? And, we don't need someone in the Bank of Canada sitting there. I know, you tell people this, and they think you're nuts, but no, you don't need to have a committee setting interest rates. You know what? If you leave the market to basically sort things out, it's amazing what it'll do. Now, I'm not a champion of unfettered markets. There are pockets of market failure. But you know what? On overnight interest rates, believe it or not, as long as you don't have it controlled by 5 or 6 actors that can rig prices like you do in some markets, it's amazing what can happen. And guess where that's happening? It's happening in the cryptocurrency DeFi space, where you have many little actors coming together, borrowing and lending money. And guess what? You get an interest rate, and it's not controlled by any one group. And the way this new decentralized financial system that's being developed on blockchains is evolving, those blockchains that are designed correctly, and there's many competing ones to filter out the bad ones. There is no one person or 5 banks or 5 groups that can influence the interest rate. It's all individual actors coming together to set the interest rate. So that, in my view, is a better way. It has huge implications, not only, Jim, I think, for the financial system, but it also makes it hard for a lot of organizations down the road to ignore proper governance procedures, because what's happening on the blockchain, you're having those who are involved have a say in what's going on. And yes, in certain blockchains you have those with more of an interest have more of a say. Okay, but that's in finance. That makes sense, right? You have the most shares in the company, you have the most votes, but it's decentralized, so it's very difficult for one or two groups in general to control things. I mean, that's in general. There are always exceptions, and that's why you always have to do your due diligence on various blockchains and various situations. But fortunately, in Canada, now we are seeing a number of public companies that can provide opportunities for investors to participate. It's very hard, Jim, for investors to get into cryptocurrencies. You've got to really want to do it. It's very hard to get these properly set interest rates in decentralized finance. You can go and get a US dollar deposit overnight, and get 5, 6, 7%, depending on where you go and the risks you're willing to take. Not 1%, not 2%. I mean, I saw an article in the Globe and Mail. This one bank is offering 2%, and the Royal Bank's only offering 1.5%. Give me a break. That again is being set by the central planners at the Bank of Canada. if you went off into various decentralized finance applications, you could do a lot better than a couple of percent. Now that's in other currencies. The Canadian, I have not come across a lot of Canadian deposit rates yet, but I believe that's changing. We talked about some events our last episode that I think are changing that, and we are going to see more Canadian decentralized finance applications, and there are stocks, we talk about them in our reports, we talk about them in chat, that are providing equity investors with a route to get exposure to these developments, because as they unfold and as they become more accepted and more people go through the hoops, you're going to have more and more adoption, and it's going to put a lot of pressure on the existing players to start offering market-based interest rates to provide people with more than 1.5% to 2% interest rates. When over in an unfettered environment, people are getting 5%, 6%, 7%. That gap is going to close. All right, and it's going to close soon. And the only thing stopping it right now are the regulators who are in the name, of course, protecting the little guy, are really actually protecting the big invested interests. I mean, that gets back to the Greenspan put back in the long-term capital days. That really, unfortunately, the system has been commandeered essentially by the status quo, but it's being ripped apart by technology, and it's going to be torn apart by demand, by people saying, no, I don't want 2% on my money. I want 5, 6, 7% on my money. And you know what? The regulators are moving in Canada. They are, they can't rush in. I don't want to, totally suggest that it's all the regulators' fault. In fact, Canadian regulators, they have their good points and their bad points, like any jurisdiction. They are moving in the cryptocurrency area. I think you're going to see some news, I hope, within the next couple of months on providing investors with even more on-ramps into decentralized finance. I have our fingers crossed. In the U.S., we're looking forward to hopefully a large IPO of a Coinbase. We will see, and they're on-ramp. One example of an on-ramp that allows people to buy cryptocurrencies, but via fiat money. But I believe we're going to have those chances here in Canada, and that's going to be a game changer. I mean, it already is for those who are willing to go through the hoops and do it, but it's going to become more accessible over the next, I hope, few months. And boy, look out. When people start realizing what's available and what they've been deprived of for the past number of years, what they've been deprived of by not having access to this, there's just going to be a stampede, and they're going to say this is great. And there's risk-reward trade-offs and everything, but the landscape is changing. I believe it's going to change this year. The one thing that could stop it is more regulatory roadblocks. We will see. I'm betting that you're going to see some big news in 2021 on that front, and that's going to open up the floodgates to major change.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, you always like to have a little educational segment on the program. Should people who are looking to invest always do what the insiders are doing?
Well, the insiders can certainly lead you to opportunity by pointing to what they're buying, but you don't always want to just jump in and say, "Oh, they're buying, I'm going to buy," because what investors always have to try and do is put the perspective of the insider and compare it to their own personal situation. So, for example, insiders, may be riskier, may have more risk tolerance than you do. So just because an insider is buying a risky mining stock, and you're not quite into that, then that's something, no, you don't want to do that. You don't want to just buy what the insiders are buying because it's not appropriate for you. And, there may be other circumstances why insiders are buying, and you really have to, I think, make sure that you can put in perspective why. Has there been news come out that would explain why the insiders are buying? Maybe there was an earnings report and the market didn't move on it and the insiders are buying. Well, yeah, that's a good combination. I love to see those combinations, and we come across that a lot. The market is just too slow, and the insiders help you poke you. Say, look over here. This is still a bargain. But then there's other situations where you have to look back and you go, why are these insiders buying now? Is this the type of investment I really want to be involved in? So, you do have to try and put things in perspective and then bring it back to your own situation. And the same goes with selling. A lot of insiders have a huge amount of their personal wealth tied up in one company, and at some point they need to diversify. And that's not always a negative. Shouldn't always be a negative sign when you, the investor, have the ability to diversify across many different companies. So, if an insider is selling, you have to look at whether, it may just be because they need to diversify their holdings, and but sometimes when insider selling is definitely a warning sign, particularly if you have a junior mining stock that shoots up on some drilling news and you see all the insiders selling. Well, when you see all the insiders selling on news, that probably tells you something. Whereas if you just see one insider selling a large chunk of stock, it may just be because that insider has liquidity needs, and we saw that actually, Jim, at the bottom of the market, and both in 2008 and last year, I saw some insiders selling. But you know what? I just took one look at it and I saw margin call, and I saw those guys are getting stopped out at the bottom, right? And they did. It happens to all of us who put in stops. We get stopped out at the wrong time, and insiders are not immune to that. So, so the short answer is no, you shouldn't as a default just do what the insiders are doing, but you should take note of it, and they could very well be leading you to opportunity or leading you away from a dangerous situation. You just have to put their perspective, align it with your perspective, and put it in the context of the news flow that is around the company, and go from there, basically.
Ted, thank you so much for chatting with us.
Well, thanks for having me back, Jim.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HoweStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.